All right, good evening, everybody. Just give me 1 minute here. Okay, happy Friday and welcome to downtown Miami. It's a very busy night here in downtown. I think there may be some sort of an event going on at the Miami Heat Arena. I think it may be a Colombian like pop singer or something, because as I was driving down here, let me see if I could zoom in on this. Well, we'll check it out. Anyway, we'll check it out. Doesn't matter. But yeah, I'm curious to see who the artist is. Tons of people walking around with Colombian flags and shirts. So maybe there's like some, famous singer. Anyway, so it is June 16th, 2023. Boy, what a week on Wall Street. Very, very eventful week. Tons of economic data. Obviously, we got the CPI numbers out, which we briefly reviewed, and they actually came in lower than the vast majority of estimates from economists. Now, the next day, we heard from the Federal Reserve. So the FOMC meeting has concluded, and Fed Chair Jerome Powell updated their monetary policy outlook, and they've chosen to leave interest rates unchanged. So as of doing this video, the Fed funds rate is held steady at a target range of 5% to 5.25%. Now, if you look at futures markets, it looks like the Federal Reserve will continue on its policy path of raising interest rates this time next month. So that means at the July 2023 FOMC meeting, it looks like we're going to get another rate hike of about 25 basis points. Now, if that's the case, the Fed funds rate will move to a target range of 5.25% to 5.5%, and that seems as if that may be it. If you look at, I should say, predictions or projections from some very notable economists, and I would say consensus from the large banks out there. You look at Goldman Sachs, BNY Mellon, BNP Paribas, Deutsche Bank. A lot of big name economists at these particular institutions are coming out and saying that about a 5.5% Fed funds rate is it, and it should be done. Now, the good news is inflation is coming down. Right, we are now under 5%. The one main area where it's still a cause for concern, and we briefly talked about this as we reviewed the CPI data, was shelter costs. Right, so shelter, I believe, makes up about 33% of that CPI number. So assuming we get a pretty big downturn in housing and prices start to come down, rents start to ease up a little bit, we could see some serious plummeting in terms of the CPI number. But as of right now, shelter costs are still relatively elevated across the United States, particularly here in Miami, Florida, which we may talk about tonight, and in big cities like New York, even in San Francisco. If you look at single-family housing, which we're actually going to get some housing data next week, there's been double-digit declines in major cities such as San Francisco, while the majority of cities on the east coast of the United States, from Boston, from New York, from Raleigh, and down to Tampa, Florida, and Miami, property valuations have actually been holding steady, if not increasing. So we'll talk about all that tonight. Another thing I wanted to bring up to everybody's attention is, let's quickly do a quick review of all the major equity indices. So the S&P 500 actually had a little bit of a reversal day. So if you go to your Bloomberg terminal, MarketSmith, Wanda, TradingView, whatever you're working with, as of right now, the S&P is about 6% extended from its 50-day moving average. So that translates to a lot of the individual stocks becoming 20, 30, sometimes even 40% extended above the 50-day. If you look at a stock like Microsoft, and I actually tweeted about this, so if you look at ticker symbol MSFT, Microsoft briefly today put in a brand new all-time record high. That is right. Microsoft broke out from the November 2021. I believe the exact date was November 22nd, 2021. That was the previous all-time high. We nixed that all-time high by about 60, 70 cents. And then we reversed hard and actually closed at the dead low of the day. This market has been bullish. We've been seeing all of the big mega cap tech leaders carry this market higher. And Microsoft, Apple, I believe, did the same exact thing today. Ticker symbol AAPL is now trading at a brand new all-time record high. I'm looking for a pullback here. Usually what will happen is you'll have the leaders run up to their previous record high, and then they'll interact with some selling pressure. And this is usually institutions selling and taking some profits, moving around positions and just reallocating their portfolios. And this is actually bullish, and it comes at an interesting time, which we're going to talk about. Usually as Wall Street heads in towards the summer season, okay, volumes across the board on all the major exchanges tend to dry up, and this is a good place for the market to give a little bit back. I'd like to see the big names, Microsoft, Amazon, Apple, Meta, Nvidia now, which is the $1 trillion club, give back some and start to form a handle. So it's going to be very telling to watch the volume actions as these stocks pull back, because as the stocks pull back, that's actually not bearish, it's actually very bullish, assuming we don't have some very disturbing pickup in volume across the board of these individual stocks. Lastly, another thing I wanted to quickly keep you guys up to date. Let's look at the Russell 2000 here for a moment, okay? Look at ticker symbol IWM. Now, this chart is very, very telling about what we've been going through in this market. It's been quite bifurcated, right? I think everybody could understand that. And if you look at the Russell 2000, we have yet to break out from the August 2022 high. We've actually been range bound, which makes sense, right? Because as we've been talking about the leaders of this market, it's mainly been in mega cap tech. The smaller caps and the mid caps have not really been participating, but we do have some good news. If you look at the percentage of stocks trading above their 200-day moving average, it's actually been expanding over the last 2 weeks. So potentially we could see a rotation out of mega cap tech and into some of these smaller and mid cap names. Now, I'm not saying that's going to happen, but I think that's what we should be looking to happen, because if this market is going to, well, it has entered a new bull market. If this bull market is going to be sustained, we need to see a very healthy pickup in breadth of the market. So that's all I got for you guys. Let me go ahead and close up my laptop and we'll get started. Let me say hello to everybody in the chat first of all. Hey, Solid Nate, what's up, dude? Good to see you. Happy Friday. Thank you for joining us. I see the ABX girl, welcome. Sunshine after rain, always appreciate you being here. Hey, Stephen Bates, what's up? I see Joseph Hardaway, Richard Vogel by the book is here. Welcome everybody to downtown Miami. Time Traveler says hello from Connecticut. I'm actually going to be in Connecticut in 2 weeks. I'll fill you guys in on that in a little bit, but Connecticut is gorgeous this time of year, by the way. I see R2D2 says, hey Tom, Bree Grams. Just have a great walk tonight. Good to see you, Bree. So we're standing on the corner of Biscayne Boulevard and Northeast 10th Street. Now, we started the video right on these stairs here, and this is pretty much at the base of the very famous 1000 Museum building, which is a Zaha Hadid structure, which is absolutely gorgeous here in downtown Miami. This building is home to some of the most famous athletes in the world, most notably David Beckham. I think he has a unit here. And all the way at the top of the building is actually a helicopter pad. So if you don't want to put up with the Miami traffic, you can just take your helicopter. or you could borrow Michelle McGraw tonight, is the Brickell neighborhood of Miami. I just got to put my laptop away. I'll put you guys down on the floor for a moment. But, you know, somebody said they're tuning in from Connecticut. I got an interesting update for you guys as it relates to Connecticut. I think we'll talk about it. Give me 1 second. All right, cool. So I've been working with one of the top real estate sales teams in New York City over the last couple months, doing some consulting. And you know what's very interesting? And I think all of our New Yorkers in the chat may find this surprising, may not. Now, everybody knows in the summer, right, in New York, if you live in the New York tri-state area, a lot of people in Manhattan tend to go out east to the Hamptons. For those of you who are not familiar, it's a very, very expensive and sort of wealthy part of eastern Long Island. You could think of Suffolk County. Now, did you guys know, and this was actually a big surprise to me, did you know that the demand this year in the Hamptons is down significantly? But do you know where demand is up significantly? Actually in parts of Connecticut. So I was talking to one of the top real estate brokers in New York City. Very, very smart lady. Have a lot of respect for her and her team. And she says a lot of clients have actually been showing big interest in renting out homes in Connecticut as opposed to the Hamptons. Now, I kind of can see why, but I'm also a little bit surprised. If you think about the Hamptons, if anybody's familiar, it's literally one way in and one way out, right? There's one road. And every single weekend in the summer, it's absolutely packed. The traffic is crazy. So maybe Connecticut is acting as a little bit of a reprieve from being so crowded, right? And I think maybe that trend started with COVID. Maybe people are still, you know, a little bit on the fritz about just being on top of one another. Wendy England says Connecticut is a little bit bougie. Well, there's a lot of hedge funders in Connecticut. I believe Ray Dalio's fund, which just happens to be one of the most successful hedge funds in the world, Bridgewater, is based in Connecticut. Tons of traffic here in downtown Miami. I believe there is a concert, very famous Colombian pop star, I believe, is performing here. Hey, British Gray is joining us from Tampa, Florida. Good to see you. I see Abdullah is here. Big Talks has hit South Beach. I was driving through South Beach today, actually. Not very busy in South Beach today, at least where I was. Hey, Matt says, good evening, everybody. Happy Friday. I just came back from Miami. I was staying in downtown Brickell, and it was my first time in Brickell. I love that place. Nice restaurants, love it. Yeah, Matt, Brickell is the place to be in Miami now. Just from 5 years ago, the place is so built up, it's so modern, it's so new. There's so many new restaurants. One of my favorite things about Brickell is actually the Brickell City Center, which we may have the opportunity to walk through tonight. But I'm glad you enjoyed your time there, man, and hopefully, you know, you'll be sold on coming back very soon. But out of all the luxury craziness in Miami that's here, this is actually my favorite building. It's the building lit up in red. It is called the Freedom Tower in Miami, and it's my absolute favorite building. It's not even a competition. I think it just represents so much about America, what makes this country the best country on planet Earth. This is where the vast majority of Cuban immigrants came to the United States. So I think it's a very symbolic and awesome building. So from the sort of miniature Freedom Tower here came these monstrosities of free markets. Let's see if we could see who's playing. Looks like a lot of people are crossing the street here. Hey, Jeremy says happy Friday, Tom. So Jeremy, good to see you. Julia M's is coming back from LA. Wow. How was LA? I got to get to LA. Never been. I would like to go. Carson is here. Says evening, Tom. Carson, did you see? I think you were watching the USA Mexico game. Great game, if anybody caught that. Amazing performance by the United States national team. 3-0 Mexico. I think Christian Pulisic had 2 really good goals. And then there was, I forget his name. I think he's new to the team. He's a Mexican-American, actually. I think he's a teenager. Scored a nice goal to make it 3-0. I don't think I've ever heard of this guy. He seems very popular, though, if he's selling out the Miami Heat Arena. This is the Miami World Tower here. Triple G says what also makes Connecticut attractive to New York transplants is the ease of access from the Metro North. That's a really good point, too. Now, did you know that at one point in time, they were going to make a connecting bridge from the North Shore of Long Island to Connecticut? Did anybody know that? Yeah, so that was going to be a thing, and I think that would have been amazing for commuters all over. But obviously, I think you guys know why that didn't materialize. If you're familiar with the North Shore of Long Island, very wealthy people that fought that tooth and nail. But I think they should have went through with it, because it is very cumbersome to go from Nassau or Suffolk County to Connecticut. If there was a bridge connecting the two, that would be fantastic. Hey, Stephanie's here. Good to see you. Yeah, Andreas is .72 is in Connecticut. .72, the owner of the New York Mets. The New York Mets. I got to get to a Mets game. Haven't been in a long time. Grant says, hello, Tom, from Edmonton, Canada. Good to see all of our viewers in Canada. I've been seeing, well, in the winter, I've been seeing tons of Canadian license plates, mostly Ontario and Quebec. Tons of Canadians love Miami. Iceman says, Tom, good evening from North Carolina. Welcome. Wabi says, howdy, did y'all read the headline this morning? Messi's move to Inter Miami could send Adidas stock soaring. Very interesting. You know, I didn't read that particular headline, but I wouldn't be surprised. Now, I'm not sure how many of you follow soccer here, but isn't Luis Suarez allegedly going to join going to join Leo Messi at Inter Miami? I think. If that happens, I mean, this place is just going to be crazy. Again, just a rumor, but supposedly Luis Suarez is going to be joining the likes of Leo Messi at Inter Miami. Now, it's funny because they actually play in Fort Lauderdale, so the traffic's probably going to be nuts up by me. Hey, Jafet Perez says, hey, Tom, good to see you, Jafet. Andreas says, lots of red cards in the game last night. There was, tons. You know, I think it's, you know, I was watching the game, and the U.S. just totally outplayed Mexico on all accounts. And that leads to severe frustration from a lot of the players on the Mexican national team. You can kind of see it. A lot of cheap shots, a lot of hacking at the ankles, just stuff that you never really want to see, because that's how the games get out of hand. And the refs, towards like the last 15 minutes of the game, I think the refs totally lost control. But hey, good result for us. I think the team looks sharp. Gio Reyna played really well too. Christian Pulisic played amazing. Hey, Elliot Wave Reviews says, Tom, do you think Bobby Kennedy Jr. has a chance in 2024 or slim to none? What a nice guy, very honest. You know, I don't know. I don't really know too much about him. The only time I've ever heard of him is over the past couple months when, you know, obviously he announced he's running. I don't really get too political, but I will say this. I think the country just needs somebody who's not going to just be so polarizing. And I think everybody could agree. Let's get somebody young who's not like, you know, if one person gets in, half the country's going to riot and burn the whole place down, and vice versa. I think we just need a new normal person. That's all. Just a new normal person who's, I mean, you know, I'll ask you guys that because we're going to sort of go into this conversation about AI and social media maybe exacerbating, I should say, emotions and feelings in the country, because that does tie into, you know, stock market and equity valuations. As you know, I just turned 28 years old. So I've only really remembered two presidents, really two presidential terms, like where I was actually paying attention. Has it always, here's my question to some of the more mature audience members out there. And this is the Elsa. This is a great hotel and residence. This is such a cool building. All of the units here come fully furnished. And when you're not using it, the hotel actually rents out the units for you. This is such a cool building. But my question is, has politics always been this crazy? Like always this divisive, I should say? Because I have a theory where it's always been like this, but social media has sort of exacerbated the conversation. Because I don't know. I mean, I remember just when people were, I don't know. I don't even know how to explain it. I feel like presidents are more hated now. Hey, Midnight Boba, good to see you. Welcome, welcome, and thank you for your very kind $5 donation. Always a pleasure to see you. Some people are saying no, not at all. The LT Prod says yes, but the involvement has increased. Davis's politics is much worse nowadays. PJL says I'm 56 and heck no. Interesting. So you, and look, I don't know. I think it could maybe be two things. But you know, I was even talking to, you know, my parents about this, and they're like, no, it's never been like, if you voted for one person, the other side absolutely hates you. I feel like that's the point it's come to now. Maybe social media has played a role in that, because, you know, information is at like light speed, but who knows? Who knows? True Chance is, Tom, I'm in my 50s and I've never seen this country more polarized. Yeah, I think it's, I mean, maybe it's just the candidates we pick. I was thinking about this the other day, and then we'll sort of move off politics because I don't really care for politics too much. But think about all of the super smart, talented, I mean, just unbelievable people we have in the United States. Like, really just think about that for a second. In the USA, we attract the best and brightest people from all over the world that are here. And like, President Joe Biden is the best we could come up with, or former President Donald Trump is the best we could come up with as candidates. It just doesn't seem right to me for some reason. I was thinking about that today. Like, out of the whole talent pool that we have, right? I mean, just think about the brilliant minds that were born and raised in America. And the politicians we have are the best that we could come up with. It just doesn't seem right. It seems like something's off there. I don't know. Now, I was talking to a person that I respect a great deal, and I promise that I'll move off this topic. But he sort of explained it to me this way. He's like, the very, very talented very seldom will go into politics because they're too busy building and creating new products and services and being innovators, whereas a lot of politicians are either just career politicians who've never built the business, who've never had success in the private sector. Now, I'm not saying everybody, right? There's exceptions. But he's like, that's sort of the reason why. Politics doesn't really attract, you know, the type of person who's gonna, you know, build the next, Tesla, or who's going to build the next Microsoft. The top talent goes to the private sector and builds out the new products and services. So that is a major, sort of the major flaw, which I guess makes sense, right? If you're super talented and if you're super smart, you would just build a company like Salesforce or Microsoft or any company, you name the company, and you'd make yourself $1 billion. Why would you want to go into politics and just fight and argue all the time? Which I guess makes sense. Yeah, Charles D says sometimes leaders are not the smartest people in the room. For sure. Hey, marketing videography, good to see you. SME Media's here. Welcome. So I did a little bit of a review at the very, very beginning of this stream. But since we have some more people in, I think it's appropriate to sort of bring it back and review the big things that happened this week on Wall Street. Even though we gave about a 10-minute intro and we sort of did a very, very deep dive into it. But it's important because I think we're at a critical point in the market. So, two major things happened this week on Wall Street. We got the updated inflation numbers out, or the CPI, which actually came in better than the consensus. It came in better than what the majority of economists were expecting, right? And a day later, we had the conclusion of the FOMC meeting, which is the Federal Open Market Committee meeting. This looks like an interesting hotel here. I always walk past this, but I never really stopped to check it out. There's always a lot of people in there. And Federal Reserve Chairman Jerome Powell decided to pause their interest rate hiking cycle. But I wanted to provide you all with a document so you could sort of see this. And I think it's important that now that it's Friday, we have the weekend to Father's Day weekend, by the way. So happy Father's Day to all the fathers out there. But we have the weekend to sort of decompress a lot of this data. So I want you to type !Fed in the chat. Okay, go ahead and do that. !Fed, F-E-D in the chat. And I've programmed the Nightbot to give you guys the link to the Federal Reserve's press release. Okay, so this is the exact document that comes out at the conclusion of the FOMC meeting, which sort of gives a summary on where we are and where we're headed. So the Fed funds rate is left unchanged. Let me just wait till the... I don't really trust any drivers here in Miami. They're almost worse than New York. No offense. So the Fed funds rate is left unchanged at 5% to 5.25%. Now, it looks like we are going to, obviously, we're going to pause this month, and then we're going to get right back on track in July. So at the July FOMC meeting, consensus is that we're probably going to continue and raise interest rates by another 25 basis points yet again. So that would bring the Fed funds target rate to 5.25 to 5.5, which, if you look at all of the, if you look at the futures market, and I should just say consensus from many economists out there, that should be it. That is not my view, but that is the view of the market. The market says, look, the Fed is going to be done at about 5.5%. Then they'll either just probably keep interest rates there, or they'll start their cutting cycle. But here's sort of what I think, and I want to sort of get a grasp on what you all think in the chat, because I think we pretty much nailed it, right? We always do a poll before each FOMC meeting, and almost everybody in the chat agreed that we would have a pause in interest rate in the hiking cycle. So here's my question for everybody as we walk down the not yet opened, I think this is Flagler Street, right off the US 1 Biscayne Boulevard. Do you think the Fed is going to be done at 5.5%? and just hold interest rates there for maybe a year, because it seems like everybody I talk to thinks that the Fed is just going to go to 5.5% and then start cutting all the way back down to zero. It doesn't have to be like that, and I don't think people are prepared for that. We could be in an interest rate environment of higher for longer, right? Where the Fed brings the Fed funds rate to 5.5% and just leaves it there for a few years, right? Assuming we don't have any systemic breakdown in the financial system. I don't know, what do you guys think about that? Wendy England says, I think they will hold. Joan K says, I agree. Interesting. Hey, Golden City, good to see you, as always. Justin S says, I don't think they are going to cut rates. Anything significant, maybe at 25 to 50 basis points, but that's it. Wabi says, I can't tell you how many solicitations I get from major banks offering 4 to 5% for money market. Yeah. I mean, that's another thing, right? If you go to your brokerage account, you can move your money to a money market account where you're going to get 5% risk-free rate of return on your money, which is very, very good. Which is actually, this could be a little bit of a contrarian case here, and I'll sort of explain what I mean by that. If you look at fund flows on Wall Street from both institutional investors and retail investors, you actually have a very glaring, significant underexposure to equities right now. And if you've watched fund flows, you've actually been seeing tons of money pour into fixed income, which has totally been the opposite of what it used to be, right? Because we were in an environment of TINA, right? TINA, which is an acronym that stands for There Is No Alternative, right? Well, now there is an alternative, because you could just go to Treasury Direct, for an example, and buy a 1-year Treasury that's going to yield you 5%. So and with this recent CPI number that came out, you're officially making more than inflation. So as we talk about the difference between nominal rates and real rates, you're actually making a real rate of return. I think that could actually fuel the equity rally even more. Because if you think about it, this market, and especially a lot of the mega cap stocks, are trading at their previous all-time record highs. Now, again, as we explained at the beginning of the stream, we should look for a handle here. It is summer, so we usually go into the summer doldrums where, the big boys or the big girls are all out in the Hamptons, they're in Connecticut hanging out, volumes dry up on the exchanges. But if everybody's underexposed to equities while the market is in a lockout rally and running away, and if everybody's in fixed income, well, that's a lot of money on the sidelines that could potentially make its way into the equity market. This is East 2nd Avenue, and this is the brand new food court that opened up in Miami. Every time we walk past here, there's a crazy long line to get in. I actually want to take you guys in here one day, but it looks like that's going to have to wait, because every single night there is a huge line to get in here. But this place is really cool. I think there's about 4 floors of restaurants, of coffee shops, bakeries, really cool stuff in here. But again, since it just opened, there's a huge long line. RB is here, says they will raise it with no hesitation as high as 7%, because it is traditional, says RB. Maybe you're right. That's a good thought. Justin S says, I have a savings account that has a 4% right now, and it keeps going up with rates at 5%. Carolina Tom, what's up, man? Says Fed needs to go to 4.25 and live there. I think that would be maybe a possibility. Now, I remember Carolina Tom very specifically. Now, does anybody know why I remember Carolina? Look at these two dogs here. So I remember this vividly. It was March of 2022, and crude oil was going gangbusters in its blow off top at like 130. And I said, I'm like, okay, there was so many comments flying in the chat about, wow, crude is going to go to 200, and a gallon of gas is going to be $18, and there was so much crazy fear over that. And I said, you know what, this has to be the top in crude. And I remember Carolina Tom was one of the only people in the chat that says, yeah, for sure, this is the top in crude, sell. And boy, did he freaking nail that trade to the wall. Crude oil's collapsed about 50%, which is good, by the way. We don't want Americans, paying $5 a gallon for gas anymore. Now, there was some news coming out of Saudi Arabia, I believe, where they floated out a rumor that they're probably going to cut production, but I don't think that's really going to have a material impact. And the reason why I don't think that's going to have a material impact is because look at the China PMI numbers. I mean, talk about a letdown. And I couldn't have been more wrong on this. And we reviewed this before, but I couldn't have been more wrong about China. I think that was probably one of my worst calls of 2022. I said, when the zero COVID policy ends in China, there's going to be an absolute economic boom that's going to happen there. And actually, the opposite happened. Chinese manufacturing is cratering and falling off a cliff. And even if you look at some of the earnings reports from the likes of Apple, Tim Cook came out on the earnings call and said specifically that he is very disappointed with the Chinese consumer because they really haven't shown up in a big way. So it's very important to be kind of wary of a lot of the numbers that come out of China. So if you have one of the largest economies in the world that their manufacturing sector is contracting, well, what does that say for demand for crude oil? So a lot of times crude can be a leading indicator for what is going to happen in markets. So interesting stuff we're seeing play out for sure. Yeah, Carolina Tom says, also Tom, I moved into dividend paying ETFs a year ago. Happy about that. Very nice. I think there's something going on here. All right, let me catch up on some of the chats. We're going to cross the street and we're going to go to Brickell tonight. Hey, Teresa Diaz, TD, good to see you. Thanks for joining us. Michael Joseph is here. Michael, I got your email about the Python. What's it called? Those resources. Thank you for sending me that. I appreciate it. Michael Joseph says it got to $8.50 a gallon in California. Fill up a truck, and you need a gasoline mortgage. Yeah, I couldn't understand how people could deal with $8.50 oil or gasoline. That's nuts. Hey, Chinook Wins is here. Good to see you. Says, I'm siding with the Fed engineered soft landing theory. Markets will stay range bound until inflation cools. Potentially. Now, if, again, I don't want to sound like a broken record, but if this market, and we're about, holy crap, I think we're about halfway through June already. Okay, that's scary. Yeah, we're about halfway through June. Crazy. Anyway, if we, on the indices, right, because we are a little bit extended, but we've reviewed this as markets emerge from bull to bear, you usually have the highest gross percentage of extension over the major moving averages in the first stage of a bull, right? It makes sense, right? Because moving averages are compressed because prices are compressed. So if we can handle here over the summer on light volume and we pull back to the 50-day and there's no like structural breakdown, that is like a green light. You got to hit the gas hard, right? Not advice. We're just talking amongst each other. But if we pull back here, there's going to be a lot of bears saying, see, I told you so, the market's going to crash. But if it's not done on very disturbing volume, and you start to see volume come in at the 50-day or even the 21-day, and a big tell that I think, if you start to see the IWM participate here, which is the Russell 2000, right? It's the ETF that tracks the Russell 2000. If we start to see a rotation out of the big mega caps into small and mid caps, that's a very bullish tell. Now, if you have MarketSmith, I know there's a lot of people that do have MarketSmith in the chat. One of my favorite things to look at is the percentage of stocks on the exchange that are trading above their 200-day moving average. And over the past 2 weeks, if you've been watching that, it's actually been expanding a great deal, which is good, which means more stocks are participating. So I think the leaders are out, right? Your NVIDIAs, all those, the AI crazies, I think they're out. Those will probably correct. And if this bull market is sustained, you'll see a rotation of that capital into other names. But if you don't see that, not good. Let me just catch up on some of the chats. The LT Prod says Chinese consumers and businesses didn't get a government bailout like the United States did during the pandemic. Dusty Cole, good to see you. Welcome. Carolina Tom says I netted 12% while the market moved sideways. That's a really good rate of return, man. That's very, very good. This is the Miami Tower behind the Courtyard Marriott. All right, we'll cross the street as we head to the Brickell district. Golden City says halfway through June, it's the St. Petersburg International Economic Forum. Have you seen it? I've not actually, but let me take a screenshot of that. All right, let's pick up the pace here. Justin S. says a lot of people out and about tonight on Friday. It seems like we have a ton of traffic, not only for that big concert that's going on. Here's the Metro Mover. But I think there's some events going on in Brickell too. SME Media says, if the Fed raises rates in July, do you think bank CD rates will rise a little more? Yeah, I do. I definitely do. Which is good. Now, here's the way I think about it. Because I've been hearing this narrative a lot, and I think it may be a little bit of an interesting way to look at it. And it could potentially deserve a reframe. So here's how I would look at it, right? Doesn't mean I'm right, but this is how I would look at it. There's a lot of people, particularly people my age, right? Because you got to put yourself in the mind frame of a millennial or somebody in the Generation Z. So why am I saying that? Well, the vast majority of our lifetimes, right? People aged 28 and below, interest rates have been artificially suppressed, right? Think about from the lows of the 2008 financial crisis. That's when we started all this nonsense of modern monetary theory and ZIRP. Artificially suppressed rates, the Federal Reserve leaving interest rates near zero and expanding their balance sheet of mortgage-backed securities and U.S. Treasuries, right? Further suppressing yields. So as rates start to go up, right, and over the last 18 months, the Federal Reserve has raised rates about 500 basis points. right? So a lot of millennials and Gen Z people, right, that are either trying to buy a house, right, first-time home buyers, they're like, oh my gosh, when are rates going to go back down? This is so weird. Like, this is not a normal environment. I think they're mistaken, right? This is actually going back to normal in a way, if you think about it. What wasn't normal is the ZIRP, right? If you go back throughout history, it's not normal to leave interest rates at zero, right? That creates asset bubbles. So a lot of people right now are like, oh my gosh, I'm getting a quote for 7.5% on a 30-year fixed. This is not normal because my cousin bought a house and he got, 3.5% on his 30-year fixed. And they're like, when are rates going to come down? What I would say is, your cousin getting a 3.5% on a 30-year fixed, that's not normal, right? If you look back throughout history, rates need to normalize. And I think this is actually a good thing. We could sort of reframe this in a different way, because think about when, my grandparents were growing up and they were in their prime working age. Well, many people, they just saved their money in a bank account, right? They went to work every day and they put their money in a bank account and they were able to build wealth through their savings. Why? Because interest rates were normalized. So if you saved your money and you did the right thing, you could actually take advantage of compounding interest in a normal bank account, which is actually good for the economy, because if you think about the way it works, savings, you want to encourage people to save their money so they can then invest in it, or so they could then invest their money, not take on a huge amount of debt and leverage everything out the ass. So the way I would look at it is, we are going back to an environment where we are going to be rewarding savers again. So if you're fiscally responsible, if you're doing the right thing, if you're going to work every day, if you're saving a portion of your income, you're going to be able to make 5% per annum again, right? And I think that's good for the country long term. So that's the way I would think about it. Because look, if you're a first-time home buyer and you don't have much money saved, I would save your money, either buy T-bills or put it in a money market. And guess what? If you continue to save a ton of money at 6 to 7% a year, you're going to have a lot of money for a down payment on a house, right? In a couple of years. So I think that's the way you should be looking at it. That's a really cool boat right there. I don't know, anybody disagree with that take? Anybody agree with that take? What are your thoughts about that? That's sort of the way I view things. Michael Joseph of ZIRP and government not selling bonds. Carolina Tom says, Tom, your assessment is correct. Must be a good rate of return on bonds again. Hey, JM, what's up? Says, where else can you take a walk through a major city and learn about the financial markets? Good to see you, GM. I'm a little bit disappointed, guys, because last year we used to see all types of stuff in the water. We used to be able to see dolphins. I don't really see any stuff now, especially at night. I was swimming today after work in North Beach, and not a massive sand shark. I was going to say massive. It wasn't massive. It was probably like a 3-foot sand shark was swimming right under me. The water is so clear here. If you go out, I would say like neck deep in the water, so like 5.5 feet, 5 feet, you could still see to the bottom. I mean, you could see turtles, you could see fish, sand sharks, all types of stuff, man. Hey, Oscar Diaz is joining us. Good to see you, Oscar. This is Yo Tom. How you doing? I'm doing really good. It's a beautiful night in Miami. Very hot, very humid. It's about 90 degrees. You got the yachts parked up on the Miami Riverwalk, and you also have the beautiful Aston Martin building, and finally the lights are starting to come on, thank God. Hey, John says, don't keep savings within ATM-like bank, but instead put it in what? Charles Schwab? What do you mean by that? Look, so long as, I think maybe your question is, you know, we've been seeing a lot of, let's just say, systemic issues in the banking sector, particularly with regional banks. So long as you have the FDIC insured limit, you're fine, right? Which I believe is $250,000. So for the vast majority of people like me and, you know, just normal working people, if you're going to save money, you probably have the means to split up, you know, the $250,000 between multiple banks. Now, if you're running a business or you're like a deca-millionaire, it's probably not going to work out for you like that. But so long as you're FDIC insured, you're fine. SME Media says, how does one attain T-bills? I think you just have to go on the Treasury Direct website. So it's the essential. Oh, look at that. They almost hit each other. Or is that an illusion? I don't know. That seemed a little bit too close for comfort. Did you guys see that? Maybe somebody could rewind that. Those boats seemed really close. I don't know if that's supposed to happen. Anyway, I believe if you want to buy U.S. Treasuries, I think you have to go to Treasury Direct, which is obviously the federal government's website, Treasury's website. But I also think you may be able to buy them in your brokerage account too. Yeah, you could buy Treasuries in your brokerage, I think. I don't know. I don't own any Treasuries. Wabi's like it's called too much beer. Hilarious. Funny. Look at all the traffic going into Brickell. Look at that. See, I'm telling you guys, downtown Miami where we were is not really where a lot of the excitement happens. It's mostly in Brickell. Look at that. That is a crazy traffic jam. Look at all those cars. Hey, E. Monica B, what's up? Now, it's my prediction that Brickell is going to get even more crazy because not only do you have the one Brickell City Center that's going to be built here, you're also going to have that crazy, super tall, I forget the exact address. We actually may walk past it tonight. It's Ken Griffin's new building that's going to be going up. So the Citadel headquarters. That thing is going to be wild. Now, I'll quickly show you guys. Oh, we can't see it from here. Oh yeah, you can. So if you look to the left of the Aston Martin building, you see that little square right here? That's the 200 Southeast Financial Center. And that's actually where I used to work. You guys have been in there, 1,000 times. But Citadel actually bought out the entire 20th floor. So that is going to be their temporary headquarters. There's no more WeWork in there, I think. But they're actually there temporarily, and then they're going to move to Brickell. They're going to have their own office tower. It's funny because Ken Griffin's not only building a state-of-the-art office tower here, he's also building another one on Park Avenue, which I'll show you guys the site maybe in like a week when we're back in Manhattan. Maybe competing with Jamie Dimon. I think I showed you guys 270 Park Avenue a couple times. That's going to be JP Morgan Chase's brand new, I think, global headquarters is going to be right there, blocks away from Grand Central Station. Really good, probably like the best location in New York in terms of for finance. All right, let's cross here. We are outside of the W Hotel as well as the Icon Brickell.
Stargate?
1,000. Hey. Oh.
Do you know about Miami Stargate?
Oh no, I don't. I'm sorry about that.
Do you want to know about Miami Stargate?
Well,
probably the next time you see me.
Yeah. Yeah. Next time.
When you look up Stargate.
We'll do that. Yeah. Yeah. For sure. Hey, have a good night. 1008. This is South Florida. Is going to start looking like New York City. Yeah, I mean, it's in a way it does a little bit, particularly here in Brickell. I'd say it's getting there. It's not there yet, but it is definitely getting there. Yes, maybe this is Miami Stargate. I'm not sure what he was talking about. I'll look it up when I get home. We'll figure it out. This is Mary Brickell Park. Steve CR, what's up? Good to see you. This is the First Presbyterian Church. Hopefully they'll preserve this forever, because this is like the original architecture that is, I should say, native to Miami. And yeah, it's nice to have things like 1000 Museum, the W Hotel and Tower, but I think it's good to also preserve the original architecture of Miami. And it also offers a really good contrast too from, you know, the monstrosities that is now Brickell. Zozo Bombs, this is a beautiful church inside. I've never been in. I love this. Check out the stained glass window. The camera probably doesn't do it justice, but this is really, really beautiful stained glass here. Love these doors. Has a very Cuban feel. Oh, speaking of Cuba, I'll give you guys a tip, and then I gotta cut the stream short tonight. I can only do it for an hour. I gotta be up at 6 o'clock in the morning. I gotta go to Coral Gables tomorrow. Maybe we'll do the stream from Coral Gables tomorrow. Who knows? Stay tuned. We'll go around the University of Miami, maybe. But my favorite Cuban restaurant here is on 73rd Street and Collins Avenue. If you follow my Twitter, if you follow @WalksWallStreet, I posted a picture of it. That place is unreal. It's called Sazon Cuban, I think. Sazon. The best Cuban food I've had here. I think it's better than the Versailles, which is very good, but I think this place may be a little bit better. But someone's like, am I taking the Vespa to Coral Gables? I am. It's supposed to rain tomorrow though, so maybe I'll have to take an Uber. But if you guys have enjoyed the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams usually every day, starting at 8:30 p.m. We'd love to have you guys along for the ride. But we covered a lot today. We talked about the potential rotation into some of the smaller caps. We did a quick review of the FOMC meeting. Once again, if you type !Fed, F-E-D, in the chat, I actually programmed the Nightbot to drop the link to the Fed's policy statement. So that is the Fed's press release. You guys could review that over the weekend if you're having coffee or just hanging out. I think that's very, very important to review that press release from the Federal Reserve. But guys, that is all the time we have for tonight, unfortunately. Have to cut the stream short at an hour tonight. I got to get some sleep, got to be up early. But we will be back tomorrow. Wishing you all an amazing weekend. Particularly a very happy Father's Day weekend to all of our fathers out there. Very, very happy Father's Day weekend to everybody, and we'll see you back here tomorrow. If not, I'll catch you on Sunday. So Wabi, thank you so much. SME Media, I appreciate it. Michael Joseph, appreciate you, sir. Carlos, Julia M, Dave S, Justin S, Michelle Henry, UniJ23. Brick Stonewall says good night. Tom C, have a good one, my friend. Richard Vogel, Abdullah Muhammad, Golden City, Gary Carpenter, all of our moderators. Appreciate you guys. Have a good weekend. Always a bull market somewhere. You just need to know where to look. We'll either be back in Coral Gables tomorrow at 8:30 or Sunday night for the Markets Look Ahead stream. Take care.